Good morning, and thanks so much for tuning into the Trade Setup. I'm Neeraj Shah, and it's Friday, and it promises to be an interesting day of trade simply because we've had 3 days of a pullback, and the global markets largely have been benign. So we've been talking about how the markets seemed ripe for a downtick. It was at the start of Monday. Coincidentally, of course, I'm not saying that I can predict the market. I think it's a market game, but it seemed to be a week bias, which is what we had said on Monday. Thus far, it's turning out to be a week of weak bias. Let's see if it improves today. Difficult to say that. But the global news flow first. McCarthy says that House would vote on debt ceiling deal as soon as next week. So that optimism is taking the markets higher. US agrees on Taiwan trade terms, clouding the plans for China talks, and the G7 nations to add further Russian sanctions. Amidst all of this, because of the deal optimism, Nasdaq rose 1.8% to close at new 52-week highs, and I think the U.S. market's performance is the standout feature of what's happened in trade yesterday. So good showing there. The question is, can it continue? The futures, as we speak, we're trading with a bit of a positive bias, so the global markets seem okay for now. Yeah, let's move on of this global news flow plate. So the global markets seem okay for now. This is the other cues, which is S&P 500 VIX, which is down further. Dollar index is flat. So no great shakes there. The SGX Nifty would be interesting because remember yesterday with the 2.21% cut, we were down for 3 days on a trot. Now at flattish start, really 0.18%, 18,211. Uh, it'll be interesting to see how it shapes up. The larger point is, viewers, just before I move to stocks, because it's a very long list and we've started late, excuse us for that. So I'll move to stocks straight away because, anyways, as like I said, predicting the markets is a bit of a monk's game. To my mind, at least, it's very difficult to do that. Maybe some expert technical chartists can do that. I certainly can't, so I'll avoid that. But just that, from whatever little I've read and spoken to dealing rooms about, even if Friday, and maybe Friday also is a bit of a dull day, but if there is a turnaround in events, it probably happens starting next week. So certainly not today. Maybe markets will want to stay light as well in the weekend, at least in India. So let's wait and watch how that shapes up. Let's move on to stocks. There's just a bunch of them which should be discussed in the session today. There are key earnings to watch out for, include a Bandhan Bank, Cochin Shipyard, EPL, which is expected to deliver a good set of numbers, Gland Pharma, which has had a fabulous run ahead of the numbers. Then JSW Steel would be important. Max Ventures, and especially after an inside interview, the stock has been on a bit of a tear. Would be interesting to see if there is more. And they need to deliver on the numbers, more importantly. One is to narrate a story, second is to be able to deliver the numbers. Can Max Ventures deliver on some numbers? That is something that the market will be watching out for as well. Zomato would be very, very interesting to see, and what is it that they can do. And Viatech Wabag, after having a decent outing the previous quarter, can they do better this time around? Is a key interesting thing to monitor. And can PNB live up to the billing that BOB and SBI have laid out? I think it'll be interesting to watch as well. Stocks to watch. Let's get to that quickly. First up, Gland Pharmaceuticals, not the healthiest of quarters. Revenue is down 29%, 785 crores. The estimates were 1114. EBITDA 168. Estimates were 351. EBITDA margin 21.5. The estimate was 31.5. PAT down 72% to 79 crores. The estimate numbers were 269. So on almost all counts, in fact, on all counts, Gland Pharma has really, really disappointed. And not surprised that this has come out per se, but just the fact that you know there were a lot of one-offs, uh, line shutdowns, customers filing for bankruptcy, all of that, which impacted the numbers. Now, for 4 straight quarters, Gland Pharma has consistently recorded a drop in sales and profit. Peak margins were 38% there and 21% now. So commentary from Gland, if it comes about, would be interesting. The con call might be interesting. Certainly a stock that will have a bit. You could argue that maybe some bit of the pain is already in the price, but I still suspect that there could be more in store. So it's something that you got to watch out for. Yes, the stocks, in line with some of the other pharma stocks, have corrected, and therefore doesn't surprise that uh, in some sense there's a problem here. But yeah, valuations have corrected a bit, and maybe that might be a bit of a respite for Gland. The other one is United Spirits. Optically, the numbers seem very weak, especially the net profit numbers and the EBITDA numbers, net profit in particular. But let's wait and watch. Some brokerages are arguing that the numbers were the weakness. This weakness was anticipated, and the stock will do well. Actually, if we can take this plate off, there's some issue, viewers. Excuse me, with the margins that we've given, but purely just looking at what they've done on the gross profit margins, those are doing okay. Uh, Actual margins 13.6 versus 16.8, and I'm reading the Nuama report, which says that the headlines for United Spirits are weak, but P&A is looking strong. Adjusted gross margin actually expanded by 256 basis points, and therefore they have a hold and not a sell with a target price of 855. So it could be interesting. United Spirits PI had a weak quarter, and it's an expensive stock with coming out excuse me, with a weak quarter. PI Industries. So revenues up 12% at 1565 crores. The estimates were 1632. EBITDA up 12% at 342 crores. The estimates were 400. EBITDA margin 21.9. The estimates were 24.6. Net profit up 37% at 280 crores. The Bloomberg estimate was 312 crores. So PI Industries, one more stock that maybe could have done a lot more than what it has, considering the valuations that it is trading at. But well, be that as it may, uh, lower than expected. EBITDA numbers certainly much lower than expected as well. CSM revenues apparently came in line with estimates and exports data, but negative operating leverage and change in the product mix expected the profitability, resulting in the kind of EBITDA margins that it has clocked. Flattish versus what was anticipated, which is that they will do actually well. Well, the other one, of course, is Sumitomo Chemicals, wherein the EBITDA was much lower than estimated. So some weak numbers out there, which are looking wobbly. Before we get to Interglobe, actually, can we just show Tata Elxsi numbers, because that's the other one that has looked slightly weak, and relative to what some of the others have done, certainly weak. So revenues up 2.47%, 837, estimates for 868. EBIT margin 27.3, estimates for 27.3. Net profit may be higher, 3.51% at 201 versus 193. But in USD terms, revenue was just up 2% QOQ. INR revenue 2.5% QOQ. Looks slightly wobbly. Transportation vertical was tepid for them at 1.7% for constant currency, relative to what a KPIT has been able to pull off. Weak set of numbers for Tata Elxsi. Let's see if it can improve in the quarter ahead. Now, some numbers which did okay. I thought Interglobe Aviation is certainly flying high. Uh, Good numbers. Revenue is up 77%, 14,160 crores. The expectations were 13,757. Expectations were anyways elevated, and they've beaten their expectations as well. EBITDA margin 20.9, estimates were 19.2. Net profit 919, estimates were 898. Very difficult to find fault with these numbers, but you would expect the market leader to come out with the numbers which they have uh, with all that's happening to SpiceJet, Go Air, so on and so forth. It would have been a negative surprise if Indigo wouldn't have done this at least. So now that they've done it, it justifies the kind of price move that we've seen in that stock. Growth was attributed to the 50% YOY increase in capacity and 11% YOY surge in yields. I reckon the brokerage notes will probably come out in a meaningful way post the analyst call, if any. So we haven't seen too much of material today on Indigo, but could be interesting. Then Uno Minda, revenues up 19%, EBITDA up 15.89%, EBITDA margin at 11.05 versus 11.7 anticipated, and net profit up 24% at 194 crores. The estimates was 179 crores. So this is Uno Minda. Numbers, you could argue largely in line. So yeah, that's at least my summation of what the numbers look like. Let's wait on how it does again. Then what stood in line was Concor and Bata. Numbers largely in line with what was believed, at least. I mean, flattish kind of a performance, no great shakes there. So both Concor and Bata kind of may not matter too much per se on the gaining side, at least. What did well was Kim's sequential recovery largely on track with almost everything, and related to Bloomberg estimates on a YY basis to doing okay. So revenue is up 54.68% at 575 crores. The estimates were 531. EBITDA margin 28.34. The estimates were 29.8. On that base, you could argue almost in line, maybe a percent miss. Net profit 93 crores. The estimates were 83.3 crores. So it did well. I mean, why? The point is, a lot of these numbers are not comparable, and you would look at YOY numbers looking okay because there were some acquisitions which were into Kim's from April 22, and therefore not exactly strictly comparable, but still, I thought the performance sequentially too was looked okay, and therefore Kim certainly stock that might stand out on the positive side. Gulf Oil, ho hum. I mean, no great shakes, a few misses here, a few misses there, but maybe correct a little bit. PNB Housing Finance was okay. Interest income up 22%, net profit up 64%, GNPAs, net NPAs improved, so that is good. And what I haven't mentioned is one stock which could actually do really well is Vindhya Telelinks. Strong performance, net profit up 80%, revenues substantially higher, EBITDA margin at 9.3 versus 9.1%. Most things did well for Vindhya Tele, so not surprised that that too has might actually have a decent outing today. Let's wait and watch if that indeed turns out. Some checks, greed and fear, Asia ex Japan portfolio changes. What Chris Wood has done is that the overweight in Thailand has been down by 1 percentage point. India weighting has gone up. Axis Bank has been initiated in the Asia ex Japan portfolio with a 5% weightage. Investment in L&T increased by 1 percentage point. ICICI Lombard has been completely removed. Investments in HDFC Bank and Reliance have been reduced by 1 percentage point. And for the India long only portfolio, investments in Thermax and Axis Bank introduced with 5% and 6% weightage respectively. Investments in ICICI Lombard, General Insurance, and Maruti Suzuki completely removed. Investment in HDFC Life reduced by 1 percentage point. So from the Chris Wood perspective, if indeed the stocks were to react, then I would look at two names. ICICI Lombard on the losing side, Axis on the gaining side. I would doubt they'll react that much really. Very long only, long-term portfolio, not necessarily changes happen the way MSCI changes were to be recommended, but would be interesting. If there are some movements, then you know why this is happening. And last but not the least, viewers, something that we'll talk about in great detail during the course of the day, which is the consultation paper by SEBI on mutual fund or AMC TERs. Now, it's a big topic. I'm sure there is feedback being given or will be sought from the AMCs, and then the decision comes in Jan. But assuming that it goes all ahead as SEBI is saying currently, then Jeffrey's estimates that the profitability of the asset management companies could come down by 13%. I would suspect that you will see some bit of a reaction today in some of the AMC stocks. So do watch out for those in the session today. Federal Bank has been rated a new overweight at JP Morgan with the target price of 150. So that's an interesting one too in the session. ITC, strong brokerage recommendation. So that is interesting. SBI is mixed, so not much. So in terms of brokerage recommendations, Federal Bank, AMCs, ITC, and Interglobe Aviation, not too many brokerages have come out, but the first cuts looked interesting. So that's the point. And a clutch of other mid-sized names that I spoke about. Now, very good conversations as well lined up today. 9:30 a.m., I think we're talking to Ace Lansdowne, Vikram Kotak, smart market man, and could be interesting to hear what he has to say about the current setup. Then 10 a.m., the chat on TCS, not Tata Consultancy Services, actually, it's not a TCS chat. Excuse me. Let's remove that plate. So Radhika Gupta Johnson to talk about the TER cuts. So that is the important one. The total expense ratio, which the SEBI is levied on, or the consultation paper that I just spoke about. So there is a 10 a.m. chat with Radhika Gupta and some advisors. So that is to be watched out for. And then a clutch of management conversations during the course of the day. PNB Housing Finance's Girish Kosgi would be joining in. Rahul Mittal of Rights at about 12:30 p.m. So that is to be watched out for as well. This is the TCS chat. TCS is the tax collected at source, where you and I or anybody else who's traveling out of India and spending on credit cards will also have to account for 20% higher spending. So Pranav Seta and Puneet Shah, two gentlemen joining to talk at that. So that is an important one as well to watch out for. And then, of course, a clutch of others. Thank you so much for tuning into the trade setup. Excuse us for being late today. Entirely my fault. But thank you so much for tuning in today. And if you don't meet me on any of the shows during the course of the day because we might be busy, have a great weekend. I'll see you with the trade setup on Monday morning.